2018 has been another year of strong financial and operational performance. Like-for-like revenues were up 9%, and we're very pleased with our continued good buyer growth, up 10%. It's also been a busy year in terms of continuing to build the portfolio. We've had 18 replications in the period, plus 6 acquisitions, 3 of which were buying in minority interests from investments we had made previously. And finally, in terms of outlook and our confidence going forward, we've increased the dividend 10% for the full year. Replications are an important part of our strategy. In 4 years, we've launched 49 new events. Last year, I said 2017 was going to be the inflection point where we moved from investment to profitability. And in 2018, we've generated 6.8 million in revenues and 1.5 million in profits. So we're very pleased that's coming through strongly. We're also pleased that we've launched the most successful show in Tarsus' 20-year history with Label Expo in Bangkok, and we're looking to continue to build on that momentum. In 2019, in terms of the outlook, trading to date has got off to a really good start. Our business has very good visibility in terms of our forward bookings, and we're continuing to see good forward bookings across the portfolio. In terms of the different regions, America up 8%, seeing good growth there. Also similar growth we're seeing in Asia, it's up 8%. And then EMEA is 12%, and that is really driven by the strong biennial shows in 2019, the Dubai Air Show and Label Expo Europe, but also by a very strong recovery in Turkey, which has been an area of concern in the last couple of years, but now is rebounding strongly. In terms of continuing to build the portfolio, we've still got a very active launch program. We're looking at 12 for the current year, and also a very active acquisition program. So all in all, we're feeling very positive as we go further into 2019.
We had a strong financial performance in 2018. Being an even year, it's the quieter year of our biennial cycle. However, across the portfolio, we had a 9% increase in revenues on a like-for-like basis at constant currencies, and that continues our strong track record of growth. The strong revenue performance flowed through well to profits and earnings, with our earnings per share increasing 15% up to 17.5 pence per share. This has allowed us to increase our dividend again this year, noting that that is now our 8th consecutive year of dividend growth, with a 10% increase to 11 pence per share. We're pleased to announce that we've increased and extended our bank facilities. These are now for a total of £150 million and comprise Tarsus' first entry into the bond market with a 7-year fixed interest rate sterling bond with Pricoa for £30 million. We also have a 5-year facility with a panel of 4 banks for £120 million. The banks are HSBC and Bank of Ireland, who we've banked with for a while, and have now been joined by Citibank and NatWest. The terms on the facilities are broadly the same as our previous bank facilities, although we now have a higher gearing covenant at 3.25 net debt to EBITDA. Whilst our medium-term target remains at the 1.5 to 2 times gear level, this higher covenant does give us a bit more flexibility in the short term and gives us some more firepower to execute our strategy. Overall, we're really pleased with these facilities, and it gives us a really good solid platform to support our strategy.